Sure it does. Okay. All right. Name, money amounts, or social security number information is incorrect. Employer must issue a new corrected W-2. Okay, so they will get something called a W-2C. That sounds like a really good question to put on your competency test. They do look different, so when they bring them in, if they don't actually issue them a new W-2, it may have different lines on it, but it's called a W-2C for corrected. Okay, so it may look a little different to you. So just know that that's possible to come in. If you have more than one W-2 and the amounts, add the amounts and they'll all go on that line 1. Kind of similar to if you have spouse. Okay, it's all going to go on that line 1 if it's all W-2. Even if you do not receive your W-2, you must still report the income. This is kind of a tricky one, okay? You must still report the income because what is needed to enter in that W-2? Well, we have to have the company's name, we have to have an EIN, that employer identification number we talked about on that W-2. And so the software doesn't like it when we don't have that information. And usually we don't do that. So what we would do is we would say, okay, if you know you worked, we have to have the W-2, number 1. Number 2, there are different ways of getting a W-2. The easiest is if the client can go back to that company and ask for a replacement. So replacement's different than a corrected. Corrected, something was wrong. Replacement is just another one because they lost it or they didn't send it to them. Okay? Thirdly, if there's an issue of it was never originally issued to anyone, we have a bigger problem than just doing the return. So in those situations, if they say the company's closed, I don't know, what have you, usually we'd have to judge the situation. If they said truly they only worked there a month, we might just let it go ahead and file the return, make a note on the packet, and then tell them, well, after March 15th or after April 1st, we'll help you contact the IRS and try to see if your company that closed issued you something. The client can also do that. They can always call the IRS. That kind of gets into more consultation things, and usually I don't have first-year preps handle those. And the IRS is even getting more picky about who can handle it, just with the security things. We have the internal Liberty securities I was telling you about, and now the IRS is going to have other securities for us as well as tax preps and for even clients to get their own information. So it's a little bit of a cat and mouse right now because they just changed them over the summer as far as who they're letting talk to the IRS, fax things to the IRS, send out information from the IRS. So if this were to happen, I would say each individual situation, you might want to roll it up to somebody and we can help you with it. But for the most part, if they tell you it's not a very big W-2, I know that's famous last words, I might would let it go as well. And just say, well, we'll notate that, we'll follow up with you and try to handle that later in the tax season. Because if it's February, that's not going to get handled for a while. And they may want to go ahead and file. If we think that maybe they're kind of smell tested, well, it's probably not been long enough, you need to wait, I would wait a little bit. Because even though they're supposed to get them out January 31st, it takes a few weeks. We're talking we need to probably wait till March 1st and say, well, March 1st, March 15th, that's kind of our guideline if you haven't gotten it by then. That's really the guideline we need to follow. Is there a set guideline from the IRS? No. But the IRS usually tells us, hey, we're not even going to see our copy. Because with W-2s, and I don't even know that that's in these chapters, the IRS gets sent a copy of everything from the employer as well. And so they know when they've gotten it. And it can take a long time from the IRS to catch up with someone on those things. If they see they haven't filed or haven't gotten it. So it's not automatic. Okay, statutory employee, it's just kind of good for you to know there's a box 13 that could be marked on W-2s, and that just means that client, that taxpayer was a full-time insurance agent, a home worker, or traveling salesperson. Okay, I have not had a lot of these checked in box 13, so it's not one I have a lot of experience with. But it does mean they may possibly able to have a different adjusted way that they deduct business expenses. Okay, that's all that means on there. This is a very general statement. Okay, in general, box 1 of Form W-2 shows the total of your income. If you receive tip income, you're also supposed to add the tips in box 1. The income showed in box 1 is your gross pay before taxes. Okay, Now, when you're entering in a W-2, all those things are put into the software, okay? But just know, your as we looked at that W-2, that first tax class, your line one is your wages, and then there's other wages as well, which we'll go over in a little bit, and then you've got your taxes on there, okay? Just kind of summarizing it for you.
When entering the wages in the tax software, you have multiple W-2s. In the software, you can enter multiple.
Yes, multiple W-2s, yes.
Roll it up into
yes,
the
correct,
account.
yes. And we will do probably 10 to 15 practice problems in the software before you guys are actually let loose. Once you've done one, it's the new software is so user-friendly. It's really user-friendly. They're in development with it. They've almost got the basics done of it because there's so many different forms they add on the back end, and they continue to beef up throughout the year. But the basics of it are done. We did get a look at it at convention a few weeks ago. Very user-friendly. So, and yes, you do literally have to click Add W-2 when they have new ones. Okay, you do have to tell the software to put those in. I don't know if we have downloadable stuff this year or not since it's new software. Prior years, we had things where some companies, payroll companies, we had agreements with that we could just click a button and it would download their stuff into the software. I don't know that we're going to have that this year, but I didn't really use it much last year anyway. So, because it's only certain ones that would work with that software. But we will get a list and we will know for sure if that's something we can see. Likewise, something else that's more on the customer side that these slides don't address is most companies have online now W-2 viewing, where you go online and post your W-2. We do allow the clients to either send them to us or print them out in store. We have, I don't know if I've emailed you guys a lot yet, but our new email is libertytaxnwa@gmail. And it will be something that if we have clients that want to email us something to print out, it's always easier to just have them send it to us for us to print it versus trying to find them a computer to get to their email. And no, just send it to us. We'll print it out for our records. I would, when you can, do it right at that moment. We've had trouble with the record keeping if we wait. But that's why at least we initialized the store's email so that it's all in the same spot. So if anybody wants something emailed, it's going to come through that Liberty Tax NWA. That way we can see it. We know it's there. We do not delete things out of there. It stays in there for infinity. It's worked really well because someone can get in there and scroll through it, and it's a good way of housing information. Now, another thing this year, though, they're also going to have is we're going to be able, with the new software, that they're going to have an uploader tool. So we can issue them like a user. There's a certain way it'll be done, but basically they could start a return. We could let them set up a username, and they could upload their W-2 so we could see it and print it that way.
Really cool.
Yeah, isn't that cool? So we won't always have to use the Gmail, but if you had someone that felt more comfortable just shooting it from their email versus setting up an account, because what you do run into, and you guys will see this, is some people aren't as tech savvy as others. So for them, if they've already got their email on their phone, or they know how to send a screenshot to their email, they may be more comfortable doing that than trying to figure out a user and setting that up for Liberty, and that may just blow their minds. So that's where, or if they call, I don't know that we're going to have the capability to do it before they've started a return. So if someone just called us point blank and said, hey, I want to go with you guys. I've used you 2 years ago. Do you have a way I can send you my stuff? Well, the easiest way might be to say, oh, we have our joint email for the store. This is the email you send it to, and we'll download it and get it started. So it's just a good way because, too, then you don't have to open up the individual tax returns. We just know that, hey, I had 3 people that said they're going to email stuff to our email. Boom, boom, boom. Versus I got to go open up all the returns and go to this portal and find it. And it seems like a lot for me. So I just like an email. There it is. It's in there. Okay. But, yeah. It'll be revamped throughout the next few years, and it'll be made better. The one thing it's not going to have, they said this year, is the portal that we're going to be able to set up for them doesn't have an alert system to tell us they've sent it. So you would have to have a box of returns of ones that you've created a portal and that you're working on that you would know to go check the portal that they've sent something. So that's the kind of the downside, is you still have to have that follow-up portion of it to know to go look for it. So We already do that a little bit with ones that are drop-offs, so it's not that much of a stretch, but definitely we'd want to stay on it and be checking all of them. Hey, do they have a portal? Just check them all. Okay, wage and other compensation, regular pay, tips, bonuses, awards, and sick pay. Okay, this is gray because not all sick pay might be taxed, but if it is, it's going to be in that box 1. Some of these guys are super general, so I do not have a printout because they kind of get redundant on some of these. Severance pay, reimbursements, holiday gifts, employer-provided vehicles. They're just telling you other types of compensation should be in that box 1. Okay, legally, that's what we'd have to tell the clients. If they say, oh, yeah, I got a big bonus this year, well, it should be on here. We don't know if it is, but you should know. Should be in box 1. I can't say, but it should be. If you think it's not, you need to go talk to your employer. We're not in the business of deciding whether the W-2 is incorrect. Obviously, if we see something blatant that we know is incorrect, we would have them maybe call. But for the most part, we usually assume the W-2 is correct. Okay. The biggest things we find that happen incorrectly is maybe there's a wrong social security number on there. That's a big boo-boo. That's a company thing. We cannot enter that in. They have to go fix it. Okay. That's the biggest one we'll see that has to get fixed. If they have a discrepancy with the taxes taken out or the amounts, that's one of those things. Well, we can file it like it is, and then you can go change it. If you want to go try to get it changed beforehand, that's fine. I would always recommend just doing it as is and letting them fight it out later. But we cannot do that if it's the wrong social, things of that nature. If their name is wrong on it, it's not as big of a deal as long as we get their legal name correct in the return. But that social is going to totally blow it up. Wrong socials on there, we got to go. And that is something we should be looking for, is to make sure the social matches their social security card and or what they've written down. Okay? That's just good practice to double check those things. Also so the client knows, hey, did you know your company has your social wrong? Because what that means is if the company has that wrong, they've got to go correct that at the IRS because they've been reporting that under somebody else's social. So we don't want that. We want to get that record corrected as soon as possible. That's just kind of a side note, but definitely good to remember those things. And that, guys, that just goes without saying that anything that looks fishy or you notice an error, definitely want to handle that on the front end versus the back end. Okay? All cash and non-cash tips received from customer are taxable income. They've told us this. Report to your employer cash, check, or credit of 20 or more. Okay? That's just general. If someone asks us about tips, they're really supposed to report $20 or more. I can guarantee you that's going to be on the exam. What's the dollar amount to report for tips? Or what's the minimum amount? Would be under $20. If it's 20 or more, and that's a quote, 20 or more for any 1 month for one job, you have to report it. Okay? Now, do you think they really do that if they come in here and sign their W-2? No, and there's no way for us to know. But legally, that's the rule that might be on the test. 20 or more, they need to report it. Okay, yet again, do not report tips under $20 a month to the employer. We already just talked about that. Is it getting when they go tip crazy? Okay. Medicare waiver payments. I had someone actually yesterday say that they've dealt with this a little bit. I've not seen it a lot. It's something that you guys may never see. But this is just a general notice in case it's brought in or you hear of it, you've at least seen it. Could be on the exam. I've never seen it, but it might be. On January 3rd, 2014, IRS issued notice 2014-7 that provides guidance on the federal income tax treatment of certain payments to individual care providers for the care of eligible individuals under a state Medicaid home and community-based service waiver program. Under the program, the care recipient can receive care at home instead of a nursing facility. The qualified Medicaid payments will be treated as difficulty of care excludable from gross income. So in summary, there may be some sort of payment they're getting. It's not going to be included in their W-2. So if they mention this, we really just need to make sure that that client knows or not whether it's reported in there. Because if it's not, we're supposed to exclude it. We don't want them being taxed on it if they're not supposed to be. So that's basically what that is saying. never really seen this or had anybody that I know for sure had this, we wouldn't have any way to know unless they tell us. So, one of those type things. Okay, yet again, more about that. Let me take a time check here. Okay, we'll go about 5 more minutes, then we'll take a quick break. Other Form 1040, line 1 income. Okay, this is kind of important. So this is other line 1 income that could be put kind of into that income section. Taxable portion of scholarships. Non-excludable dependent care, that's daycare. So if you paid into work, you're taxed on any excess, okay, that you don't use because you were paid out for it. Non-excludable employer-provided adoption, disability pensions received prior retirement age, household employee income not reported on a W-2. Okay, this is talking about the IRS came up with a weird rule a couple of years ago that if you have one employee in your house, say like a nanny, that if you set their schedule and you tell them when to be there, or a housekeeper or anything like that, technically they should be an employee, not self-employed. Now, a lot of people are not doing that still. I don't know why they would, but technically they're supposed to not be self-employed. You're really supposed to do a W-2 on them. But it's few and far and in between. But they're just saying these different things should also be included as income. Yet again, we only know what's on the W-2 and what they tell us, but they're just giving you a heads up. If any of that's on the W-2, it's going to be income. Scholarships, that comes on a different form, but it's going to get rolled into the income if there's a taxable portion. So that would mean like they got more back than what they used. It could possibly be taxed. And they may not realize it. So it's just one of those things, sometimes we run into it a little bit. Tax-free and tax-deferred. Okay? Tax-free means the income is not included in gross income and taxes are not paid right now. Okay? It's tax-free. You don't have to pay taxes. Example, group health insurance. Usually they pull those out before they tax you, so you're not taxed on it. Tax-deferred, when you defer something, you put it off, right? The money is taxed in the year it's withdrawn from the plan. Example, retirement contributions. Okay? You get a break on them now, right? Sometimes they'll pull out of your W-2. You get a break on them right now. When you pull those out later, you're taxed on them. Okay? That's all that means. And this is just kind of a general rule here. Okay. I'm not going to go over that again. Nope. Okay. We'll go over a few more slides, then we'll take a quick break. Withheld taxes. So we've already talked about this on your W-2. You have to withhold taxes, right? Normally, most people, unless there's certain exemptions, withhold taxes. And so we'll talk about some of those when we look at the W-4 in a minute. You're generally expected to pay at least 90% of your expected tax liability during the year. Okay? So if you don't pay 100% of your tax liability, what happens to your refund? Do you get a refund if you didn't meet your tax liability for the year? No, you're going to owe. Okay? So that's how we know someone owes, is in the software or when we're doing the return. If they have a tax liability and they didn't withhold enough, okay, they're going to owe the difference. It's what you withheld for the year versus what the IRS is saying you should have withheld. That difference is either going to be a refund or you're going to owe. Okay? What else do I want to say about that? We're going to get into the W-4 in a minute, so we'll probably take a quick break before we get to that. Most of you guys have all filled out W-4s while you're working. We don't get a lot of people, believe it or not, that call and ask us before they fill those out. I wish they would, because most people wait till they come in like February or March and they're like, hey, did I do this right? And it's like, no, you owe like $3,000. Whoops. You should have talked to us before that. So we do try to look for those things too. I always have you guys go over that with them. If we notice that discrepancy, so they're not withholding enough, as we would say, we'll mention it to them. We legally are within the right to help them with that. We can't do much more than that as far as that goes, as far as advising. But if we notice that on their W-2, we can at least say, well, you held out a bunch over here, but your spouse wasn't withholding anything. You need to have that corrected with your HR. And I'll talk more about the W-4 when we get over there. But yeah, so If you think of any questions between now and the next 5 minutes, jot them down as far as withholdings, W-4, anything we've gone over so far you have questions about. Let's take 5, as they would say. Get you a drink, sugar up, all that good
Sugar.
stuff. Sugar up. Where's that sugar going?